Welcome. So today we're going to be talking about deciding to register your business. And or not is what I'd like to say, is because we find a lot of people at the business center come and ask for that kind of information, advice, things like that. So we're going to walk through the sort of things that you need to think about. I will say to you though, I make sure that before, so I'm going to give you some highlights and some hints today, but before you actually go ahead and register your business, make sure you talk to one of our business advisors. We'll talk about at the end on how you get in touch with one of our business advisors, because sometimes you can work through some of the dynamics that maybe you're not sure of. And again, there's a lot of you on the call, so I can't be specific to each and every one of you. So sometimes there's some dynamics that we're not aware of that you might need to consider first before you decide. Okay, so welcome. Nice to have you here. Thanks for joining us today, and we'll get started. So first slide, please, Angie. I know sometimes there's a bit of delay with our internet here as well too. So these are kind of three main formats, if you will, of business ownership. We're going to talk about each one of them in great detail. I'm also going to talk a little bit about co-ops, which tend to be not often as regarded, but a really excellent way of doing business if you have several people involved. So we'll talk about that in a second, but just sort of give you a highlight. So we'll talk a little bit about sole proprietorship, partnerships, and incorporation, both federally and provincial. Okay, and so as Angie said, she's here monitoring the chat as well. She'll also be sending links to you as well, as far as, some of the links that we talk about today. So, if there's anything, so don't worry, make sure that you can pay attention. Sometimes we get busy scribbling, writing things down, and we miss, what was that she said? I couldn't hear what she said. So relax, let's talk a little bit about, and then, like I said, know that Angie will follow up with you afterwards. Okay. All right. So let's talk about business ownership. So we'll go to our next slide, and we'll get into some details. So first of all, there's a lot to think about. You don't always have to register a business. And why I say that is because, especially if you're considering sole proprietorship, or if you're a partner, which is one, they're sort of very similar in a lot of nature, partnerships, right? When you have more than one person. If I was to, in the example that you use your own name, so if I was to start a business tomorrow, as I said, my name is Kristel Manes, and I actually put my name, Kristel Manes, that's the name of my business. Maybe I'm doing consulting services or facilitation services or whatever. I'm branding my name as the business name. Then I don't have to register, because that name already belongs to me, right? It's my name. So I'm allowed to use it as my name and then the name of my business. However, if you decide to register a business that is not your name, then that's when you need to register. Okay, so giving a couple examples here. So if there, you can see we've got a list of a bunch of things. So in that example, as I said, if I was to register a business name, Kristel Manes, I could use that and not register. If I was to register maybe a name called Kristel's, I don't know, Kristel's Antiques, how about that? I like antiques. If that was the word Kristel belongs to me, but antiques does not. And so that way I would need to register my business, okay? And we'll talk about the different ways of registering in just a minute. This is sort of just a casual thing to keep in mind. If your business is incorporated, if you actually, again, same thing. So oftentimes we'll incorporate, and we'll talk a little bit about that. It's either usually you incorporate the name of the business, or you incorporate as what we call a numbered company. If you've ever seen it, it'll be 1, 2, 3, 4, 5, 6, Ontario Limited, Ontario Inc. That's what we refer to when we talk about a numbered company. But if I am still using that, let's keep using the Kristel's Antiques just to make it easy for everybody. So if I have incorporated that name, if I've used a numbered company, let's just say, and I'm still using the name Kristel's Antiques, then I would have to register that still. Even though I've incorporated, I'd still have to register Kristel Antiques. Okay, so that's important for you to know. If you have partners in the business, if you are deciding to create a partnership, and again, we'll go in more detail about what that looks like. But again, if you are operating under a different name, then you must register. Okay, so if it's a numbered company again, and you're operating, Angie and I are partners, and we've built out Kristel's Antiques, then we would both have to again register under that as well. I think it seems pretty straightforward for the rest of them. There's different examples that we're going to go to about partnerships and limited partnerships and things like that. Why this is important to know this is that, just so you know, when we talk about sole proprietorship, is it actually, oh, and one of the other ones I want to mention too is that if it's actually the business name has expired. So when we talk about registering as a sole proprietor partnership, there's a date, there's a time that it actually expires. And so it's important for you, it's a 5-year window. So it's important for you to re-register. But again, we'll get more detail as we go along. Okay. So hopefully nobody's jumped off yet. They're not like, oh my gosh, this is so confusing. I promise you we'll break it down by each of those things, but those are something. The key point take home for this is if you are using a name other than your own, you must register. That's as clear as I can be. Okay, so sole proprietor. It is basically, a sole proprietor is probably the easiest, cheapest way to get into business. You register, you go to serviceontario.ca would help. Ontario serves, it's definitely Tuesday after. I think I still have a turkey coma going on. I'm not going to lie. I had a lot of turkey this weekend. Hope everybody had a great Thanksgiving weekend. But in saying that, a sole proprietorship is the easiest, cheapest way. So you go to ontario.ca, serviceontario.ca, and there's business registration. It takes you probably about 20 minutes to fill it out. It'll ask you things like the name of the business that you want to call it. What do you do? What sort of, there's a little window there that you can sort of provide 3 sort of very key points. It doesn't allow you to write a book about your business. It asks you for, 3 key points about your business. So my antique store, I would say I'm a retail business. I sell antiques and maybe I do appraisals. Those are my 3 key things that I do with my antique business. Okay. So once you complete this form and you fill it all out, you click the button, and basically what happens is you produce what we call a master business license. Okay. So a master business license is something now these days, everything is online. So they will actually email you a copy of this as well. You'll ask at the end of your registration, say, would you like us to email you a copy of this? Please do, because they get lost very easily. So print off a couple while you're there and then email yourself a copy as well, so you have it for later on. The reason why is that master business allows you a couple of things. First of all, it acknowledges you as a business in the province of Ontario. It allows you to legally advertise that name that you've registered in the province of Ontario. Okay. And it also allows you to open up a business bank account. For some of you, you might have tried at some point, when you're starting to open up a business or you're thinking about it, and ask the bank about business accounts and say, well, you must have a master business license. This is what we're talking about. That's why I always say print a couple copies, because you're going to find a few places will need that. We'll talk about that as we go on. Okay. So master business license, it has a 5-year expiry. And I want to remind everybody that it simply expires. So you'll have a start day, it's the day that you register, and you'll have an end day, which will be literally 5 years to the day you started. There is no formal registry, like our health cards or our driver's license, how they send us out those nice little notices. Hey, it's time to renew. It's time to come back in and, pay us the money, or, take your picture again. There is no formal ministry that governs this. So there is no formal reminders. It will simply expire once that date has passed. Okay. So it's the very simplest, easy things. Couple things to know about sole proprietorship is that you have sole responsibility for making decisions, and you have sole responsibility about the money that comes into your business, claiming it, the profits, the losses even. And, there is no differentiation between business and personal. So what I mean by that is, as a sole proprietor, your year end is December 31st, same as our personal taxation year. Okay, that's really important to remember. When December 31st, so it wouldn't matter if I registered today. If I decided today I'm going to sign up for my master business license and I go online, and today is October 12th, I think today. That's terrible. I don't even know what day it is. Yes, it is the 12th. So if it was October 12th, my year end would still be this coming December 31st. And I would report on the activities from October 12th to December 31st. Where do I report this? Well, as a sole proprietor, any money that you've made revenues that you've earned gets reported in our personal income tax. Okay, so there's actually a section when you do your personal income tax that is for small business, and you would report any income you've made. You would even report losses that you've made. The government will allow, I can't say that I shouldn't say this officially, but usually around, first year or two, sometimes we lose money in business. So we have to report that. It appears as a credit on our income tax. However, by year 3, if we're still, it's not a strategy, folks. And that's why I say that out loud. It's not a tax saving strategy, because after year 3 of you reporting a consistent loss with your business, Revenue Canada is going to come knocking and say, well, maybe you shouldn't be in business because obviously you're not being successful and you can't continue to use this as a credit. Okay. So first year, second year, you can claim a loss. By year 3, you need to reevaluate what's going on with your business. Hopefully you don't get that far. Hopefully you've come to see us already at the business center so we can work with one of our advisors and help you. Okay, so it's really important for you to know that you need to operate this business. It is tied to you personally. I'm going to talk about commercial insurance at the end, but what I will say to you right now to highlight for sole proprietorship, it is absolutely critical that you get some kind of general liability insurance. And we have people that we can refer. We don't get anything for it. They're just partners of the center and they know what we do. But if you haven't talked to somebody about it, you need to. Again, because it's tied to you personally, and if anything happens with the business, God forbid something goes wrong, you are on the hook for it. So for example, let me give you an example of that. If I was making healthcare products, maybe I had a line of creams and lotions and face creams and all kinds of stuff. And somebody bought my product, they used it, they ended up having a terrible rash, maybe they ended up having a terrible allergic reaction, ended up in the hospital, God forbid they passed away, something really terrible happened because of my product. They would, that person or the person's family or the estate would be able to sue me personally. And if I don't have general insurance to cover that potential hazard, there goes my house, my car, my boat, my cottage, my life savings, everything. Okay, so it's really important to think about insurance, okay, because it is tied to you personally. I'm just going to stop if there's any quick questions to make sure everybody's okay so far. But sole proprietor, easiest, cheapest way to get into business, licenses for 5 years. It is tied to you personally. Make sure you get insurance. And it follows our taxation year, same as our personal income tax. Angie, you want to add something?
No, I was just going to say I don't see any questions currently in the chat.
Perfect.
If anybody wants to add something now, we can. If not, we'll
keep going. Yeah, because we're only here for an hour, so there's lots of time here. Okay. All right, so that's sole proprietorship in its nutshell. And I will say to you, a lot of people actually start off as sole proprietors, because some people say, I don't know if I should start off as incorporator, sole proprietor. I would say to you that a lot of people start off for sole proprietorship, and it's based on when they achieve certain revenue levels sometimes, that then they make the switch over to income tax. I got income tax on the brain, over to incorporation, right? So once you start and think about it, when you think about this, you know your own personal taxes and how much you pay and how much you declare. If it's all judged on revenue, right? Monies that you make and income. So if you start reporting excessive income, then that tax bracket increased quite incrementally. So I know that, you get yourself into the 45 and 50% tax bracket that you're paying, then that would be definitely a time to think about incorporation, where we separate business and personal. And there's better tax advantages for you to be incorporated at that point. Okay. So that's kind of one of the gauges. The other gauge would be risk factor. So again, if I was in the business of the healthcare example that I just gave you, or if I was any kind of risk business, food-based business, health-based businesses, construction-based businesses, trades, anything where there's a risk of something going wrong that could be substantial, then I would absolutely go right to incorporation. I wouldn't, don't pass go right to incorporation. All right. And there's reasons, we'll talk about that when we get there. Okay. You'll see why I say that. Okay, hopefully that helps. The next sort of very similar to sole proprietor. So alongside with sole proprietor, if you are in a partnership, if there's one or two or three, sorry, there's got to be more than one, 2 or 3 of you that want to, again, form a business together and you're not ready for incorporation, a partnership is a great way to start. Equally so, it is handled very similarly to the sole proprietorship. So the same thing applies. You go on to the serviceontario.ca that Angie provided the link. You would register the partnership. Now the question would be around what type of partnership is it? And there's 2 types basically. There's what we call a 50 general partnership, which means that you agree you're 50% each. Okay, so if Angie and I were going to business, she'd have 50% and I would have 50%. That's what we call a general partnership. You would, on the form, you would list the information, you would list both partners, both addresses, you would put 50%, same thing applies. You'd talk about the nature of the business, what is it you guys do in 3 key words, we're going to split it 50-50, put all the necessary information where they can find you, and then you have your master business license. A limited partnership is a little more tricky, in that a limited partnership is exactly as it sounds. It's a different ratio split. So if Angie and I decided that maybe she does more work than I do, so maybe I'm just the cash person, so I'll take my 20% and she can have 80% if she agrees to do the work. So it's that 80-20, 60-40, 70-30. Now it's really, really important that you think about partnerships. The reason I say that is because Angie and I could probably run a 3-day workshop on all the things that can go wrong. I see partnerships all the time where it was my best friend since high school. We went to kindergarten together. It is my spouse. It is my mother, my father, my cousin. I don't care who it is. As soon as you start mixing money into that relationship, it is bound to go wrong. It's things around money, sweat equity. What that means is, one partner might be putting in more work, but, they're getting paid equally. You name it. We've seen all the stories of how it can go wrong. Not to say that it's we still promote it because it is a form of business. But what I would say to you, if any of you are considering a partnership, please do me a personal favor and Angie to actually do what we call a partnership agreement. And what that means is, so you would register your partnership, but then you would have a separate document detailing exactly what is regarded in that partnership. So in the event that if it was 50-50, what's Angie doing? What's her roles in this partnership? What's she responsible for? What's equivalent to 50%? What's my role in this? What am I responsible for my 50%? And then it's very clearly documented and it can be adhered to. Because if Angie says, oh, Kristel, you're not doing what you're supposed to, remember, that's part of our partnership that you're responsible for the financial reporting, then that's fair, right? So that's how you keep each other accountable. The other piece to that is that partnership agreements are very helpful in a case that things start to go wrong, or perhaps one of the partners gets ill, sick, incapacitated anyway, can't perform their partnership role, then it gives you room. If it's already been pre-negotiated and pre-decided what would happen. Same with the death of a partner. God forbid, if there's something happens to one of the partners, I can tell you right now that Canada Revenue automatically freezes partnership accounts when there's a death of one of the partners until the state starts to be cleared and things start to be addressed. So monies are frozen. So it's pretty hard to run a business especially if you're keeping up with operations while that happens, right? So, and that's where sometimes there'll be a partner's spouse that then gets shares and comes into the business, and maybe it's somebody you really don't like. You think, oh my goodness, why did they let their partner come in? Why did they give them their shares? Things like that. This all has to be thought about and agreed upon prior to joining the partnership. So that's where all that information would be listed in your partnership agreement. So we agree that if, God forbid something happens to me, Angie and I would agree on what would happen to my shares and who could participate and act on my behalf. Or maybe it gives Angie the first right of refusal that she can buy out my shares first, whatever that looks like and however it's regarded. Okay. So that's the first thing I want to say. Okay. In saying that, sorry, my phone is going crazy here. Okay, so that's partnership. It's handled the same way as year end is December 31st, same as our personal tax year. And we would claim it based on what type of partnership we have. So for example, if it's 50-50 like a general partnership, then Angie would claim 50% of the income we brought in, and I would claim 50%. If it's 70-30, Angie would claim the 70%, I would claim the 30%. And it's reported the same way on the same income tax forms that you would do with your personal income tax. Okay? If there's a loss, same rule applies. The only other caution I would say to you is, again, be careful about if you start to find, and this should be in the agreement, that if you know how things work. So for example, understand that even though you're only 50% partnership, so Angie and I are 50-50, even though we're each 50% of the business, we're still both 100% responsible. So what I mean by that is if Angie and I are in business and things are going a little rough, maybe money didn't work out so well, maybe we owe a lot of money, we didn't make as much money as we thought, we're actually losing money, and I decide to skip town and run off to Vegas where Angie's not going to be able to find me, trust me, I have a hiding spot, then what happens is if the creditors come to Angie and say, Angie will say, well, no, I'll pay my 50%, and Kristel, you'll have to find her and then she'll pay hers. And they're like, no. You're 100% responsible, and it's your obligation to find Kristel. Good luck with that, but it's your obligation. So Angie would still be responsible for 100% of the debt, even though she's only listed at 50%. Choose your partners wisely, folks. Choose your partners wisely, okay? All right, hopefully that clarifies that a little bit. And if there's any questions, I'll just stop for a second. Okay. Perfect. So a couple things there. I just want, like I said, so contribution is really important. Just I always like to sort of sum it up, is that contributions, make sure you agree on the contribution, what that sweat equity is. If anybody's ever heard of that form, it's just basically it's sweat equity is the work that people actually do. If nobody's familiar with that. So what's your contribution? What's my contribution? What do we do with profits? What do we do about losses? What's each of our roles? Who's responsible for what? Make sure this is all documented. What happens if there's changes to the partnership, and ultimately conflict resolution. Oftentimes this is when we see a lot, and I've seen it before, whether you'll see actual partnerships go to mediation, things like that. So you would actually write that in the document as well. If we can't agree, then we agree that XYZ company will come in and mediate on our behalf. Don't get to this point though. Honestly, it's a nightmare. Okay. All right. So far, so good. We have a quiet crowd here. That's good. We're taking all the information in. That's awesome. Okay. So we're going to talk a little bit about incorporation now. So what I want to mention about federal incorporation, so there's two types. There's federal versus provincial. Federal incorporation, I'll start with that. It actually tends to be cheaper for some strange reason. And this is only used if you plan to put your business, I should clarify this, if you plan to put a head office or an office space in other provinces other than Ontario. So for example, if I was a warehousing business, and trucking and warehousing was my business, I certainly would need to be federally incorporated, because chances are I might have an office or a warehouse in Vancouver, and then I might have one in Newfoundland. Okay, I cover coast to coast, so that would make sense. So I would federally incorporate it. It's if you just plan to run the business here in Ontario, then provincial tends to be the way to go. It is a little bit more cost expensive, and it really just comes down to dollars. You can also, if you grow your company, then you certainly can move from provincial incorporation to a federal one, right? As you grow your businesses and you start to say, yeah, no, we need an office in Vancouver, we need one in Calgary, then that's when you can move to that. You can always move that way, okay? So that's something to keep thoughtful about. I want to clarify though, this has nothing to do with sales. So This is about having an actual structural organization in another province. I say that because sometimes people will say, well, what happens if I sell, if I have an e-commerce store or I have an online store that I sell in other provinces, I sell stuff to and things like that, that has nothing to do with incorporation. Okay. Your home office is Ontario, then you would stick with a provincial, a registration. Okay. I just always like to change and make sure that. And again, we'll talk a little bit more detail about this incorporation too. So I'm not done yet. Okay. Angie, I'll just get you to send that over. Okay. So one other benefits about incorporating. So I'm going to stick for now just for the provincial, because that's most likely to be most relevant for most of us. There's year-end flexibility, which means that you don't have to have December 31st. You can, but you can change your year-end depending on the nature of your business to suit your business needs. So to give you an example, I had a home hardware store. I owned a home hardware, and my year-end was always January 31st. The reason being is my inventory in my hardware store was at its lowest point in January. We went through Christmas. We had all kinds of appliances and giftware and toys and all kinds of stuff in our home hardware. So after Christmas, after January Boxing Day sales, by the end of January, I hadn't brought my new spring stuff in yet. It was the lowest point, the easiest point to count inventory in a hardware store. So that's why I chose January 31st. Okay. So you have flexibility with that. Here at the Business Center, we are a not-for-profit, and we receive a lot of funding from provincial and federal partnerships. And our year end is automatically March 31st because that aligns itself with federal and provincial budgets as well. Okay, because that's their year ends as well. So that makes sense that we would do the same. So you have flexibility on that. The gift that keeps on giving. One thing I love about incorporation is you can sell out of your corporation. So if you created, you built an organization, you built an amazing, successful business, you can be bought and sold out of that business, and the corporation still keeps going, right? You can arrange to have still be receive dividends, things like that, depending on how you're bought out and sold. But the point is that the corporation is still standing and still can be fluent to you as well too. Attractive in the sense that investors like to see incorporated companies. They tend to often, not always, but the majority of them a high percentage, I'm going to say, tend to lend to incorporated companies just because of the stability, the expense. We'll talk about the expense in a second, but there's more of an investment in setting up an incorporated company. And I think that sometimes lends the idea it's more stable for them to invest in. Okay, again, it's perception. I'm not saying it's reality, but I can tell you I work with a lot of investors and they tend to go more to the corporation end. Liability. Remember, we talked about the liability as a sole proprietor, that it's correlation directly attached to you. What incorporation does is it separates business and personal. Okay, so when you form a corporation, you're over here and your business is over here, and it becomes its own entity. So that you actually, in most cases, people tend to be employees of their own companies, right? Even if you're a person of one, if I have my own business, I'm one person and I'm incorporated, I'm an employee of that incorporation. So the business becomes its own entity, it has its own taxation, it has its own liabilities, it has its own protection, etc. And it doesn't mean that you can't be sued. In that example of that health, where I mentioned about somebody having a bad reaction to my creams and ended up being sick or passing away because of it. Maybe they were allergic to something in the formula, but it does put a wall of protection because the company's assets are what would be going after first. Okay, so that's where incorporation can help with that personal liability. It separates business and personal. There's very clear structured guidelines with setting up incorporations because you go through it with a lawyer, and you set up the bylaws, how things are supposed to be. It's all written. This is all part of the incorporation process. Everything is written out and then submitted for approvals and sign-offs. So it becomes very structured. Sometimes sole proprietors, we're kind of going in 5 different directions and we kind of don't have policies. We don't have procedures necessarily in place. Incorporated is where all the things are guidelined right away. It's sort of like guiding principles from the get-go. Okay. Lower tax rates. You can sell securities, but I'm not going to spend too much time on that right now. But lower taxation rates for sure as an incorporated company. And what happens oftentimes, if you are an employee, it's set up that you can either be set up as an employee of the corporation where you would actually get a regular paycheck, and at tax time you get a T4, that's what you would declare in your personal income tax, right? Because the taxation for the company is separate. But as it being separate like that, it can take advantage of better corporate taxation. So because taxation is different and it's handled differently for things like depreciation and all those things when it's an incorporated company. So sometimes there's some better leverage with you having an incorporated company. You can take it public. So you might decide that you want to open up shares. So selling securities, selling shares to your business makes it a lot easier. You can't do that as a sole proprietor, but you can do that as an incorporation. Tim Hortons, a couple of years ago, set up, I guess it was about 5 years ago, went public with their stocks. And they sent, they were selling stocks, penny stocks to investors, and anybody could buy it. Anybody could buy it. I actually have shares of Tim Hortons stock, which is funny because my mom worked for the company, so I inherited her shares. So it's easy for it to take. You can take it public. There's no limit of owners with an incorporation, so there could be 5 or 6 of you working together, and limited different structures and different reasons and different things. But there's no things. Employee benefits, once you also get to that level, it's easy for you to be able to offer employee benefits. Incorporated businesses tend to be more accessible to that type of thing. Credibility, name protection. That's one thing I want to mention. If you incorporate your name, so if you have that Kristel's Antiques and I incorporate that name, then nobody else can use that name. With a sole proprietorship, there is no name protection. So that's one thing to keep in mind. So if I had Kristel's Antiques, that's, as a sole proprietor, I can register that names, but Angie could come along. Angie lives in Woodstock, so she could actually decide that she wants to open up a Kristel's Antiques in Woodstock too. And there would be nothing I could do about it because with sole proprietorship, there's no protection that way. But incorporated, then I could send Angie a little note and say, sorry, I already incorporated that name. It belongs to me. Here's my information, and please cease and desist on using that name. Okay, so there's more things. Financing, choice of pay. Like I said, you can become an employee.
The name protection thing, Kristel, just make a note. Your name protection for an incorporated is only for the province you're incorporated in.
Correct.
It doesn't travel outside the province or the country. To do that, you need to trademark. So you need to go through a whole other set of lawyers for that, because each province, each country, everything wants their own amount of money to have a trademark in each of those countries.
Of course.
So
of course, because that's how they run their businesses. Thanks for adding that too. That's a very valuable point. Yep. And last thing would be choice of pay. So, as I said, you could be an employee of your own company and get your own regular paychecks and T4s. You can get dividends or shares. Sometimes in the first early years, people tend not to take money out of their business unless they absolutely need it. So they reinvest it, which becomes your dividends, your shares. They get paid out once a year instead of a regular paycheck. That's a discussion. So that's sort of incorporation. Hopefully that helps. There's a lot there you can see the differences. A lot more technical, a lot more involved in doing a corporation. Cost-wise, you're looking probably, I think that's my next slide. Yeah, it's definitely certainly more administrative cost-wise. It costs you anywhere between, I'm going to say on an average, $1,000 to $1,500 to incorporate. It's not, people have those, sometimes they'll print off, well, I printed it offline and I filled out. You still need a lawyer to review it because those are very general, and they don't cover every aspect. And so you want to make sure that you're properly protected. So you're still going to pay a lawyer $200-300 an hour to review it. So upfront costs, whereas sole proprietorship or registering a partnership is only $60. It's a big difference, right? As well, when you have an incorporation, you must actually do financial returns, annual financial returns. You have to work with a lawyer who signs off on your books that you're doing what we call minutes. So you have to keep recording. If there's more than one person in In the corporation, you have to have regular meetings where you would record the minutes of that meeting, and that all gets signed off by a lawyer saying that you're following all the bylaws and things like that. Even if you're a team of one, you still have to do minutes and things like that. There's a different way of doing it. Then, and the other piece to that is then you also have to have an accountant to review your books as well at the year end. They'll have to sign off, they audit, they'll look at that, and that's another expense. You're usually looking between sometimes, depending on how difficult it is, it could be anywhere from 2,500 plus for an audit. So somebody asked about it is considered a business expense. So yes, you can claim it as a business because it's 100% business. That's one thing about incorporation. It is 100% business expense, right? Yeah. So hope that.
Yeah, so it's like, can you claim items as business expense even if the item was purchased before the business was registered? And it's really dependent on what the items are.
And the timing.
And the timing. I do recommend, we have a CRA tax seminar for sole proprietors coming up in November. So I'd recommend registering for that. Also, I'm supposed to be getting one for incorporated businesses as well. So those are two things. Yeah, a laptop is funny because a laptop is a depreciated item. So it requires you to do a whole nother set of calculations on how to claim that over multiple years of usage. So do take, I highly recommend taking the CRA tax seminar. We have a CRA member who comes with us, actually goes through all the ins and outs for you because it's so finicky when it comes to taxes that you really need to talk with somebody for the ins and outs. Sorry about that.
Okay, and yeah, so I think the next slide here, Angie, I just have to disappear for a second. I have somebody downstairs who needs me. Can you chat a little bit about the co-ops for me?
Yeah, not a problem. So aside from sole proprietor, partnership, and corporation, there are other formats of business. Co-ops is one of them. So a co-op is a format of business where you create a board, and anybody it's like one of the biggest ones that we've known of that was a co-op. I don't believe it's still a co-op, was MEC, where everybody who was purchasing from that store had a membership, and part of that membership was they got to have a voting right within that corporation, so within that business. What this means is that people within the business, like you can have more people. We've seen co-ops do really well in smaller towns and across the board for industries, especially things like we've seen a couple of gyms do them. We've seen a couple of farmers markets. And what it means is that at the end of the year, any money made can either go back to the business or go out to your constituents. So all the people who bought into this business get to have something back. They also get a say in it. So again, it's that whole big vote. So you have to do boards. I could go on about this, but really I would recommend, if you're thinking of doing a co-op, we do have a workshop in this next week, specifically with Co-ops Ontario, where they will go through all the little ins and outs of what a co-op entails. So what's nice with a co-op though, is you tend to make a co-op to keep something that you might not have enough money to get going, or you might want an option for people to buy into it, a community opportunity, things like that. So this gives you a chance to broaden out the spectrum of people who are investing in this business to keep it going. And it tends to be a community involvement. So you've seen, like I said, you see a lot of these that are community related, where a community gets together and decides to turn something into a co-op to build it out. So it is a different format. It's something that if you are thinking of doing this, take the workshop. You can also meet with one of our advisors. She's really good on these kind of things. They will help you navigate it. It has a whole nother set of rules and regulations that you need to navigate. Just like a corporation. So there are structures already put into place by the government on how to navigate and how to build out a co-op. What am I on? I have so many things. So the cooperative advantages. So sports, local economics, business, community development. It is a versatile model. So you can apply to organizations of any size in any sector. The biggest one that a lot of people like is that the profits are distributed in a wide variety of ways. So sometimes they put them back into the business. Sometimes it's an incentive base. Sometimes people get a certain amount, a small check for $20 at the end of the year. There are different ways that these co-ops can be built and structured, and how those monies go back in. And again, that whole thing is that everybody is a shareholder to some extent. Anybody who is a member within this will help. Disadvantages. So like anything, everything has its ups and downs. Some of the big one is that having somebody who's willing to put the time and effort into putting together the model, helping you build it out, doing the research. And again, it's board meetings, things like that. So understanding that it's what kind of model and how it can work within a group, in a group environment, is very useful. It is, but again, it's very well known as a economic supportive model. So it's a business model that if you're very much about a community involvement within your industry or business, this is one that you might want to consider. Another things are things like, I don't have it on here, we'll go on to insurance in a second, are items like non-for-profits, nonprofits, charities. Those are all their own unique formats. So if you are thinking of any of those, please connect with one of our business advisors, and we can help guide you with those. They're kind of their own structure, nonprofits and that, and they also have very strict rules government-wise to how to register and how to be accepted into those kind of formats. So insurance, we pretty much tell everybody, if you are a small business, no matter what, you should look into some format of insurance. Home-based businesses are slightly different than brick and mortar businesses. We go big into this in our Business 101, but it's something to consider either way, is that you want to know if somebody is coming to your property, no matter where you're working, whether it's at home or somewhere else, to deliver stuff, to pick up stuff, to have a customer meeting, you are liable to potentially, if they get injured, if you have product in your house and it's a fire, things like that. So we want to make sure that you understand that in order to run a business, you want to be covered. You don't want to have those concerns of things going wrong on that off chance and you not having that coverage. Just as a warning, if you are a home-based business and you're like, oh no, I have house insurance, it'll cover it. If you have lots of products, say your garage is filled with products, you're a crafter, that's your main business, and you have a fire and all those products go away. If you did not tell them that you are a business, your insurance company, they can refuse to pay out. They can refuse to help you with paying any of the current insurance on your home insurance, and especially covering any of those items that aren't just considered standard home-based items. Because you did not tell them that you are a business. So you are required to tell them. Same with your car. If you're using it regularly for deliveries, things like that, you should connect with them to find out about whether or not you have to pay different insurance, or you can add a clause onto your current vehicle insurances. Life insurance is one of those things that we also talk about, because if you are a sole proprietor, or even if you are in a corporation, if something happens to you, how are things going to get covered? If you are the main income for your household, that's just a general, like, just to be aware, things get frozen. I have seen a few households that got really hampered because somebody passed away or got injured and their accounts got frozen. And so then they had to wait, and was the insurance that allowed them to continue living until those accounts got unfrozen and they could move on with things. So just do consider all the ins and outs, talking about insurance. And I keep talking about all the different sessions. We have a session coming up with an insurance broker who will help you go navigate that if you'd like to attend as well. So thank you, everybody. If you have any questions or that, do connect with us, success@guelphbusiness.com, or you can check our website, guelphbusiness.com. We have lots of resources there, but do connect with me directly if you have any problems.